So thank you very much again for making the time. It's probably worth starting with introduction. So my name's Adam Ryan. I'm a senior associate at Freshfields. I specialise in the TMT and financial services sector, specialising in Fintech there.
Great to meet you. Matteo, Stefanel, one of the founders here at APIS Partners. And as you know, we focus specifically on financial services and financial technology in Africa and South Asia.
Yeah, Goyal, the other founder of APIS, along with Matteo. And as Matteo said, very much focused in this space, but from a geographical perspective, Africa, South Asia, which we're incredibly passionate about. And it's great to see other people becoming passionate about those geographies as well.
The word fintech is quite interesting. It's almost impossible to pick up a paper today and not see the word fintech sort of sprawled all over the newspapers. But you've said before that you don't think there's anything in the term fintech. I was wondering if you could expand upon that a little.
Yeah, sure. I mean, I'll start off by saying, obviously we're being a little bit provocative in that, but there is actually a very strong element of truth in what we say. We've been doing this for 20 years. We've been focusing on financial technology for 20 years, simply because all financial services rely on technology. Unless you're using an abacus nowadays to run a bank, you are using technology if you run a financial services company. Now, having said that, we sometimes use the word financial technology or fintech because it's a shorthand, it's a moniker by which we all understand what we mean. And what we mean truly is the innovation, the transformation of the financial services sector and the industry as a result of the new technologies and the new business models that are emerging. It's not just about the tech, it's about the business models as well. You see, many of the innovative business models that we're seeing are not relying on new technology at all, actually. M-Pesa certainly doesn't rely on new technology per se. It relies on having developed a new business model, having successfully deployed the new business model, and having created actually a new type of financial services where that simply didn't exist. To repeat what Udayan said, technology is not a differentiator. It is just an enabler for the necessary evolution of the sector.
And picking up on that, the evolution of business models that you mentioned, specifically in Africa, what are you seeing there in terms of that evolution?
Well, you're seeing everything from enabling business models that are profitable at a lower price point, thereby being able to profitably address a population that certainly between Africa and South Asia, we're talking about 2.4 billion people being unbanked out of 2.9 billion people in total. You're talking about a banking sector penetration in sub-Saharan Africa of only 24%. So you're seeing innovation being developed to address, and I repeat, I hesitate using the word innovation, new business models, I think is the best way to put it, to address profitably this part of the population.
We can use a couple of very specific examples in the sector. So one could be remittances. So if you look at traditional remittances, the way you would send money would be to walk up to an agent, put the money with the agent would then send the money to the other side of the world, and you'd go and pick it up at an agent. So today, where are we moving to? Today, everybody has a mobile phone. I'm sure you do. I'm sure everybody who's listening to this has one. And it's much easier for you to pick up your mobile phone, either pull up an app or go onto a website, go to a site and say, I want to send this much money, $100 to so-and-so in this country. And then that's now rapidly either getting delivered into a bank account or, in the case of many places around Africa, into a mobile wallet. So it's delivered directly into the mobile wallet and then enters that mobile wallet ecosystem. So this is a significant change in a business model, and what it's actually doing is taking a lot of cost out of the system. Because in order to run an agent network, both on the send side and the receive side, you have to pay those agents. So you have to pay the send agent and you have to pay the receive agent. If you suddenly take out both of those, you can basically quarter the cost of sending those remittances, which ultimately then benefits the end consumer. And so this is all about benefiting the end consumer and bringing more money into their hands.
So all in all, what makes this possible, if that's part of your question? Well, first of all, as Udayan said, mobile telephones. Mobile telephones now, Android handsets, are available at below $30. That just was never the case. Anyway, just going back 5 years, non-smartphones would be more expensive than that. So this is a complete radical shift. You now have supercomputers because that's what they are, available at $30. The second point is real-time payments. Real-time payments were, first of all, and actually as a global first, launched in India, not in the UK, not in the US. They're now becoming increasingly widespread throughout Africa. This is what enables financial services to drop down in terms of distribution in a cost-efficient manner, and of course the ability of doing micropayments profitably, so real-time micropayments. The third point is data and the level of data connectivity that you have throughout the African continent. We shared, in fact, it was shared with us by one of our senior advisors, JP Rangaswamy, who's the Chief Data Officer of Deutsche Bank today. He used to be the Chief Scientist of Salesforce.com. He showed us a very interesting chart with the T1 connections and all the cabling around Africa that is supposed to go online over the next 5 years. It's mind-boggling. It's going to radically change the availability of data connectivity throughout the continent. So, and I repeat, price point for data for handsets, the availability of real-time and micro-size payments, and the connectivity level throughout the continent. These three elements radically change the availability of financial services.
In many of these markets, people have moved away from fixed line telephony, so they never even saw a fixed line, directly into mobile phone telephony, and the infrastructure got built around that without that intermediate infrastructure being built. And that's exactly what's happening in many of these financial services subsegments.
And are you seeing the shift in infrastructure leading to greater investment in the African region?
You're seeing a lot of investment moving into interesting business models, which people think may take shape, but without having the knowledge of whether they'll be successful or not. I think there is some capital flowing into the underlying infrastructure of that, and that's really where the opportunity is. Not necessarily on what you see on the face of it, but what's enabling some of these new business models. So let's take an example. One of the main enabling technologies for mobile wallets across different markets is the ability to connect different mobile wallets together. How do you do that? You get into switching. What is switching? Switching is a hub which connects different mobile wallets to each other and connects the banks and basically acts as the connectivity layer for the entire ecosystem to move money around. And so that's an interesting opportunity to put money on, and we are seeing some money flowing into, for example, the switching market. There are funds who put money into large switches in Nigeria a few years ago. That's now spreading into other markets, and people are now seeing these connectivity layers as being an opportune place to go. However, there's also a lot of money moving to the front end, but more on the venture side of the business, which is, because of the risk associated with maybe even building a wallet. But that's, I guess, more on the consumer side. And that's really what you're seeing. What you read in the press, I think, is a lot around the consumer side, whereas where we think the real opportunity is less on the consumer side and potentially from an infrastructure side on the B2B side.